We're gonna talk about trend today, right? What's funny is I'll talk about trend as if it's somewhat minor, but it's the most a major thing that you got going on with stocks. It's the most major, right? So we're gonna talk about that. We're gonna share with you guys how to spot trends. All right. I'm not even gonna waste time. I figure shoot, we might as well just get right to it, right? Let's get right to it because you need it. Part two of your trading education. What's up? All right, cool. Let's pull out some stocks as normally, right? First off, here, guys, I got this stuff for you so you actually know what it looks like on the charts. Trend is so important because trend actually tells you how your play is basically creating the move that you're going to be trading. It's from the interaction your play has with its own trend. This is where traders will instantaneously go left in thinking about a trade idea in the first place, right? All right, so let me give you context, and then we'll tell you about essentially what you see here on a chart, right? I don't really care which ticker it is, even though this ticker I'm looking at right now is oil. It's oil futures to be exact. It doesn't matter, right? You need to be able to read what the trend is, right? Now this is how trading works. See, I'm getting right to it. This is how trading works. Trading says this: you're going to take reversals of a big move down. Got you. You're going to take reversals of a big move up. Got you. The end, written, produced, right? Edited by that scenario. That is your trade idea. Don't you come into a market, watch this, and don't know what you're doing. You are taking the reversal of a big move up or big move down. Watch this. You'll have traders on year three. Watch this. How do you structure the fact that a trade is worthwhile? Volume, price action, order block, fair value gap, right? Breakout, break and retest, right? You're gonna get everything. Then the bare essentials for taking a trade. What's the bare essentials? The reversal of a big move up or the reversal of a big move down. That's trading. That's trading, right? So in trading, you're gonna get the following scenarios. I can actually go over trend with you because trend is actually how your play basically gets that power in the first place, right? It gets it essentially through the trend. When I say through the trend, basically understand this scenario. You get a you get a scenario in trading where you pretty much you have a run-in with the higher time frame trend. You have run-ins with the higher time frame trend to create the moves that you receive in the market. All right. So since we got all up, we're just gonna keep all up the whole segue here on this particular lesson. All right. We're gonna keep it up. All right. So take a look here. So this is all right, and this is the move that essentially all made in coming. Let's say even from like 8 o'clock. Right. All had a stronger. Look what all did. All had a strong move down. Did it not? Had a strong move down. Look at this. Even the oil futures around $78. From $78, oil, right? Just give me an example of how to understand how trading works, right? You're taking reversals of strong moves to the downside, reversals of strong moves to the upside. The question you should then have after I give you that assessment is how? How will I know that the downward move has stopped that I can take the reversal? Good question. How will I know that the strong move to the upside has stopped that I can take the reversal? Great question. So glad that you locked in. Watch this. For oil that has a strong move down, watch even further away. I'm just giving you 78 as the more of a like recent droppage. But this play has been dropping from the previous day high. That's this red line, and that was the pre-market high. You've been dropping from the previous day's high area, right? Coming into Friday, boom, you form a pre-market low. Now watch this. Traders would want to say that this pre-market low, watch this. This is what traders will do. Traders say this pre-market low, this key level, this is the lowest that we went in pre-market. It's so powerful that it reverses the play back up. Let's talk to you about trend. All right. First off, guys, very easily, what is an uptrend? Watch this. This is how I identify it. Where the 5 SMA leads, the 10 simple moving averages in second place, And the 20 simple moving averages in third place. Okay, that's what an uptrend looks like. I use moving averages because I get way more context than your basic traders that use basically price action. They'll say that this price action has a higher high, higher low. Watch this. Higher high, higher low, higher high. Okay, and it stopped giving those higher lows. It breaks down the previous higher low. Traders will say, hey, this play is starting to have a shift. It's not enough context. It is not enough context. This is the way that most traders, either from that or traders, when you start forming those higher highs and higher lows, or lower lows and lower highs, watch this, they start drawing trend lines. As long as you hold this particular area where you keep bouncing off of, you're trending, right? So you don't even know, watch this. Oh, when it breaks through, it's probably gonna do a break and retest because it was respecting it before, right? Yeah, it didn't respect it, got disrespectful actually, right? And continued downward price action, right? You're not getting enough intel from this stuff. I don't teach it. I don't teach trend from that perspective. It is terrible. I promise you, it is freaking terrible. The trend lines, I'm not teaching it. The channels that you believe the prices to be in, watch this, they will change the channel on you. I promise you. What's a channel? A channel is when you get like these trend line areas that it shows you both. Watch this. It shows you the front side of the resistance. Look at this front side resistance. They'll say it's inside of this channel until it breaks the channel. Watch this. It's going to change the damn channel on you. You're going to be like, what the hell is going on? This is what uh, novice traders anticipate for the play to at least give a retest to show that it can't get back into it before it breaks down. Hey, sorry, dude, no retest. We're out of here, right? We don't trade it. All right. So you first off, so you understand everybody in the room. So instantaneously, you understand why I'm not doing higher highs and higher lows. Okay. Why I'm not doing lower lows and lower highs to identify what a trend is in any market structure. Bump it. I don't want it. Right. This is the narrative that you need to understand. You need to commit it to heart. I'm looking at the market from the standpoint of how trend is interconnected. What does that mean? Okay, got you. The parts of your body, watch this. I don't want to identify you by your left hand. I don't want to identify you by your right leg. Why? If I identify the parts of your body that make up the entirety of your overall body, got you. Every part of your body plays a role into that. Got you. What do traders do? Traders find the favorite parts of the body that they like to identify is the body, and make their assessments about what the body can and cannot do based upon their favorite parts of the body. Not the entire body. Not the entire body. You think it doesn't happen? It absolutely freaking happens. Traders will say, hey, I like what this chart is doing. I have top down analysis, which is the stupidest thing that it doesn't make sense because they don't actually do top down analysis. Watch this. Most time they stop where I went to a daily chart and I looked to see how trend was structuring together from the daily down to the 1 minute chart. Not the weekly. Didn't even take a look at it. Not the monthly chart. Didn't even take a look at it. I saw how we were moving from the daily chart back down to smaller time frames to see how the confluences were coming together to analyze what I believe is the entire body of how a play gets its power. Your plays get their power from its internal structure. You move because of how your entire body has an internal structure to move. It has muscles, right? You got a brain, heart, blood flow, right? You move based upon your own internal organs, right? You do. You do. Right? So the stock market moves from its own internal organs. What would that be? That would be the overall structure that makes it up. What would that be? Its trend. Its trend is its internal organs. So what are you doing when you trade? I'm looking to see how a play is equipped from its internal organs to have upward and downward price action. Not outside factors. Outside factors, watch this, have to play along with the external, with the internal structure of your play. What does that mean in layman's term? Got you. You think from the standpoint that, watch this, Because you go to the gym, you take the action of going to the gym. This means that now all of a sudden, because you went to the gym, you took some action, that now you can lift 500 pounds. That makes no sense, right? No, yeah. You would have to already be equipped internally to lift 500 pounds, right? It's about you, not what's outside of you, right? What do traders do? Traders think that price action can sustain upward and downward price action. Watch this, not because of its internal structure, because of external factors like what? News. News came out. Is news a part of the internal structure of a play? No, it absolutely comes. You can see it came from CNN. It came from CNBC. Right? It's an outside factor. Absolutely, absolutely. News is external. Earnings comes out. It's still news, right? Market sentiment. This happened overseas. External. Watch this. Those things. Watch this, mess with the internal structure of a play to either help change it, but you got to get to that internal structure. You got to attack that internal structure because you have to sustain it, right? This is like a uncle. He comes, spends time with his niece or with his nephew, right? And then watch this. Whatever imprint that he leaves on that child, he leaves. Do you hear me? He's not the one that's raising the child day to day. It's the parents, right? The parents have a direct role towards that child's well being, right? Not the weekend uncle, right? Does he leave an imprint? Absolutely. Does news leave an imprint? Absolutely. News allowed your internal structure to start to either shift or change, right? It created an event, right? That allowed upward and downward price action. Watch this. Then news leaves. You have people that look at market structure and say, hey, what moves the markets? News. You talking about the weekend uncle? Yeah, that's why we gonna be moving for the next 2 months. From that news? No, we're gonna have to its own internal structure. The parents is what's gonna cause you're gonna get your day-to-day movements based on the interaction with the parents, the caretakers. The caretakers for a chart is its trend. Trend on watch this. You gotta have different ways of looking at it because it's not the same. Even though it's the overall structure, that means that your trend on a play has only one structure has only one structure, right? When you talk about trend, trend is a piece of the puzzle that makes up the overall structure for how your play sustains upward and downward price action, right? Now, the role that trend plays for you is the following, right? Different time frames have different trends. You can have a trend on a 1 minute chart, a 5 minute chart, a 15, a 30, a 1 hour, a 4 hour, a daily, a weekly, a monthly, a quarterly, a yearly, right? You got different trends. Watch this. Do not, do not try to differentiate those trends to make it seem that one trend, watch this, has nothing to do with the other parts of the trends. What do you mean? You could be in an uptrend, on a 1 minute chart, all the way to a 1 hour chart. You mean in an uptrend? That looks like this, right? Where the 5 simple moving average leads, got you. Where the 10 simple moving averages in second, got you. Where the 20 simple moving averages in third place, right? Got you. That's an uptrend, okay? Here's the problem. If you're not in an uptrend on a 4 hour chart, you're not on an uptrend on a daily chart. This is problematic. Is it invalid? Smaller time frames could be in a trending formation, but if bigger time frames, watch this, cannot shift. You hear me? They can't shift to begin to break down their structures, to begin to start following suit. You're going to give that move, that uptrend, yeah, you're going to give it back. All right. So let's give you a case in point because traders may not understand market structure. I'm gonna understand it for you. Don't worry about it, right? So if you were you misunderstood, right? Because watch this. for oil, you were actually in an uptrend, 5, 10, 20. I use Bollinger Bands, which we'll talk about in another lesson, right? But it gets into that even Bollinger Band right here on the 15-minute chart, which means you're also doing this on the 1 and the 5-minute chart, right? Is what it does, because this is the way trend works. If I'm in a downtrend, very strong downtrend, multiple time frames, the first time frame that will correct, it's going to be my 1-minute chart. So watch this. At this point, officially, right here, we're trending. 5 SMA, 10 SMA, 20 simple moving average, third place. That's an uptrend on the 15, right? The 1-minute chart already is in trending formation before that. Watch where that yellow line was. Watch how the 1-minute chart already will be in the formation that we're talking about before that yellow line. This is going to be your visual proof that, man, you need to start analyzing trends differently. That's the yellow line where the 15-minute chart is getting into that formation where the 5 SMA leads, 10 SMAs in second, 20 SMAs in third place. Watch this. 1-minute chart already had that going. Like I said, before that yellow line. Watch this. 1-minute chart already started doing that. Watch this all the way back, initially back here. 1-minute chart got into trending formation, got out of trending formation, got back into trending formation before the 15-minute chart ever got in it. Trend is different, but it's a part of the overall structure. You need to understand this narrative. You need to understand this narrative. This is probably the thing that I struggle the most when I'm teaching people about trends. I struggle the most in teaching people that you don't look at trend independently from the overall structure, but you do understand the differences so you can rationalize what type of trending strength that you actually have. Right? You got to be able to rationalize what type of trend do I actually have. All right. All right, cool. So let's look at something real quick. I don't know why my internet is acting a little funny. Give me a second here. I'm gonna try to see if I can get that back. Acting a little crazy. All right, cool. Now check this out. So I'm gonna tell you what happened, and actually we probably need to go over a few more trends because I actually want you guys to draw it. It looks like I need to reconnect. Give me a second to the internet here. One sec. And we'll tell you what trends look like. All right. A downtrend. A downtrend, we just did the uptrend. A downtrend is when the 5 SMA leads, the 10 SMAs in second place, and the 20 simple moving averages in third place. That's what a downtrend looks like. All right. That's what a downtrend looks like. We're going to go into what a neutral trend looks like. It is not that difficult. I promise you, it is not. It is not that difficult. Okay. When we did an uptrend, we did a downtrend. Neutral. Neutral can have different looks, but essentially, when I look at the 5 SMA, the 10 SMA, and the 20 SMA, neutral is when I have flattened, like they're flattened. That 5, that 10, and that 20. The 5 SMA could be coming up, but the 10 SMA generally is going to be either flat. The 20 SMA is somewhat flattened. It's not coming at me at an angle. This right here, watch this. The moment that this 5 SMA on a downtrend flattens, you see this flatten right here? 5 SMA goes flat. The trend is starting to neutralize. See how I'm walking you down through it? You were in a downtrend. Your traders will be thinking that they're trading what's called a falling knife. When you get a downtrend, they want to take the move back up. They're concerned because they think, watch this, they think that the play can instantaneously, even though it's bouncing back up, drop back down nasty, right? They think that the play can instantaneously drop back down pretty nasty. All right, so take a look here. The way that it works, the multiple videos that I'm gonna have to do just in talking about trend is going to be crazy. I already know it. I'm gonna have to do multiple videos about trend I won't even be able to cover a lot of the things I already want to share with you guys because I'm gonna have to spend time on trend. Most of the people that I teach can't properly identify trend. They can't help it. They lock into one time frame without looking to see if it's validated by another. They can't help it. All right. So let's show you a little bit. I'm not playing. They don't look to see if it's validated by another time frame. Why? Let's talk about trend. Let's just spend some time on trend. If the 1 minute chart gets into, and we're getting ready to show you what neutral trend looks like. We're also getting ready to talk to you about what a buyer's neutral looks like and what a seller's neutral looks like. All right. We're going to talk to you about it. But one thing you need to understand about trend is that it's connected. I keep saying that in this entire video. Trend is connected. What does that mean? That means if the 1 minute chart gets into an uptrend formation, the 5 minute chart has to be able to start following it. The 5 minute chart has to be able to start following. Is that what is that? Why is that? Because trend is connected. If the 1 minute chart gets into a downtrend, and the 5 minute chart can't get into the same sequence, there's 5 SMA leads, the 10 SMAs in second, the 20 SMAs in third place, what's going to happen is your play is going to reverse. Why? Because trend is connected. The trend on the 1 minute chart has a direct correlation to do what it's doing if the 5 minute chart can follow suit. If it can't, you're going to reverse. Why is that deadly? Traders, watch this, will see that a time frame that they're trading is in a downtrend. Even if they do the more generic way, lower low, lower high, lower low, it's trending, right? Especially if they get their little trend lines, right? We're trending. Watch this. If I saw that this was happening on a 1 hour chart, 1 hour chart's at a downtrend, right? If I don't have the mindset to know, hey, can the 4 hour chart follow suit? Is the 4 hour chart also downtrending? I don't have that. Why would you look for a 4 hour chart? There's an assembly line approach. You need to write down these time frames: 1 minute, 5 minute, 15, 30, 1 hour, 4 hour, daily, weekly, monthly, quarterly, yearly. You need to write it down again: 1 minute, 5 minute, 15, 30, 1 hour, 4 hour, daily, weekly, monthly, quarterly, yearly. They make up overall structure. Watch this. There's an assembly line. What's an assembly line? Assembly line would be equivalent to if you have, let's say, 10 steps to get something done. Watch this. You're not going to finish step 10 first. You're not going to finish step 10 first. You're going to finish step 1 first. Damn, that makes sense. It does. You completed step 1. What are we qualified for now? Step 2. Damn, that makes sense. Then what? Step 3. Damn. Watch this. When you say, hey, a 15-minute chart is trending, that for me, that's step 3. Well, what's step 4? The 30. What's step 5? The 1 hour. What's step 6? 4 hour. What's step 7? Daily. What's step 8? The weekly. What's step 10? Monthly. Step 11? Quarterly. Step 12? Yearly. Hey, Reggie, we're trending step 5. 1 minute, 5 minute, 15, 30, 1 hour. Oh, step 5? 1 hour. What am I automatically, watch traders, what am I automatically looking for? We're trending on the 1 hour chart? I'm looking to see if step 6 can follow suit. Who's step 6? From the 1 hour? 4 hour. Why? Because if the 4 hour chart can't get into the same formation, or we're going against, here's where price action gets you. We're going against the 4 hour chart. What does that mean? So glad that you asked. I'm going to show you what that looks like on a chart. And before we do that, let's go over some trends once again, okay? Show you guys what a neutral trend looks like. Guys, this is the definition of a neutral trend. where essentially you have flattened SMAs. Look at the 5 SMA, flat. 10 SMA is more on the flattened side, and the 20 SMA is there. They're like flattened. It's neutral. The moment I do things like this, I got a downtrend, flatten, V shape. Look at this V shape. Y'all see how it's curving up? Yeah, I can hit resistance and come back down. That is a buyer's neutral. That is a buyer's neutral. That V-shaped recovery, it's a buyer's neutral. What's a buyer's neutral? It's a neutral trend that buyers are in control of. What's a seller's neutral? It's the opposite. It's when you have a strong move to the upside, boom, you lose the uptrend. Look, 5, 10, 20, it does a V-shaped recovery. That play now, even if it bounces, you're coming back into a trend that sellers are in control of. It's a seller's neutral. Look what it looks like. That 5 SMA is curving down at you, right? I'm not in a downtrend just yet. Why? Because my 5 SMA has to lead. My 10 SMA has to get in second. And then my 20 SMA has to get in third place. Now, watch this. I'm in a downtrend. But that V-shaped recovery already tells me this is a seller's neutral formation. Even if I hit support, hey, let me take the move back up. It's a seller's neutral. I'm going to have to break that in order to once again sustain upward price action, right? So we went over trends just like that, just like that. Went over a buyer's neutral. What's that? Come on, let's do it again. You're in a very strong downtrend. You get a V-shaped recovery. The moment you even go flat, that play becomes neutral. Even now, if you have other SMAs, like a 10 SMA coming down or a 20 SMA comes down, it tells you that this part of the trend is still neutral, but this part of the trend will still be coming down at you if it's at a very sharp angle. It still would be classified more as this type of seller's neutral. Okay, buyer's neutral, same thing, very strong uptrend. Trade breaks down. People think trades go from uptrend to downtrends. They don't. They go from uptrend to neutral. Seller's neutral. Downtrend. You got the order messed up. Your car don't go from drive to reverse. Your car doesn't go from reverse to drive. You don't even go from reverse to neutral. What do? You go from reverse, brake, neutral, drive. You go from drive, Yo, you just throw the car in neutral? Nope. Drive, brake, neutral, reverse. Gotcha. All right. All right. So those trends. So with this play here on oil, right, that basically gives you a strong move. We're going to go back to it at 9:30. You got a strong move that basically ended up coming back up. Let's talk about it, right? How do you look at plays? All right, got you. Now, this is your standpoint. We don't have much to talk about if you don't understand trend. What's an uptrend? 5 SMA leads, 10 SMA second, 20 SMAs in third place. What's a buyer's neutral? I had a stronger move down, but I got these V-shaped recoveries. I got either that 5 SMA coming at me, that 10 SMA coming at me. I can even have scenarios where the 5 SMA on a buyer's neutral. Watch this. It could be already up, right? I can already have an upward move, and the move went neutral, right? My 5 SMA goes neutral. My 5 SMA even starts to come down. Got you. My 10 SMA could be slightly behind it because it generally will be trailing the 5 simple moving average. But if I got a 20 simple moving average coming up at an angle, this is still a buyer's neutral. It's neutral at the top, even seller's neutral at the top. But at the bottom, that angle lets me know that is a problem because I'm not in downtrend formation. What's downtrend formation? Write this stuff down. That's why I keep going over different examples. Where the 5 SMA leads, the 10 SMAs in second, and the 20 SMAs in third place. You're not in a downtrend, okay? You're not in a downtrend. You got context for essentially that scenario, all right? So let's talk about here with oil. While we got this stronger move actually came back up, and also the move that came back down. Let's give context, okay? Because when you understand moving averages, you can walk down these plays essentially in regards towards the structure. I promise you, probably like the next 3 videos that I put out on these lives are all going to be about trend. There's no point of me essentially going further if you guys can't understand the trend that a play is in, because there's this narrative where the higher time frames, the higher ones, the 4-hour chart, the daily, the weekly, Yeah, you basically run into their structure to get your power. What do you mean you say running? Like the price action. The price action runs into a 4 hour chart uptrend. How? Smaller time frames get into trending formation to run into that trend on a higher time frame. When they run into the trend on a higher time frame, that trend is so powerful, it should be, you can want to call it demand or supply. It has the ability to change smaller time frames trends. What do you mean? You could be in a downtrend on the 1, 5, and 15 and 30-minute chart. But if you then crash into the 4 hour chart's uptrend, the 4 hour chart's uptrend is so severe, how it creates demand, very strong support, that you can change the trend on a 1 minute chart. You can change the trend on a 5 minute chart. You can change the trend on a 15. You can change the trend on a 30-minute chart. You mean make them go from downtrend to uptrend? Yes, sir. That's how powerful it is. So imagine if you can't see it, like most people, because they're not going to use moving averages. They're not going to be able to see that, oh, I'm going into that. Watch this. Even if this upward move that the market gave you here on this one was a direct correlation that this play crashed into a higher time frame trend. All right, so on Friday, oil, what you doing? Oil had a strong move down. It stopped. Traders are always going to just highlight the area. Oh, it formed a base. That base is what empowered us to get a strong move up. You have no context about market structure. You have no, why did you form that base of all places, particularly there? You don't have any insight about why it did it. I'm going to tell you why it did it. Watch this. Let's go to the daily chart. Daily chart says the following. I have a Bollinger Band here, right? So that daily chart shows me at this particular area, right here, narrow Bollinger Band. I have a daily demand at that area. We'll talk about Bollinger Bands in the future, but the daily chart had a narrow Bollinger Band that was there, right? So it tells me when if it's narrow, that area is a demand, just like this area up here is a supply. It tells you about historical data, Bollinger Bands, 2 standard deviations. Oh yeah, there is a key area of supply here that dropped us. Bollinger Band already got it there, right? At the same token, it tells us that this is a key area of support. Did it make it up out of thin air? Didn't make that area. This was the same area. This is the same area that you were struggling to break out from. Look at it. This is the same area that this play was struggling to break out from, right? That it consolidated and then it broke. Look at the candle when it broke through this exact same area. It was struggling to get, it broke. Volatility came in there. It registers for the Bollinger Band. So you come back to an area where you had that strength. The Bollinger Band already tells you about the severity of coming back into that area, right? It's a nice way that you can already see where demand and supply is actually sitting on the charts historically. This is not opinionated. You can actually see, oh, why is that there? Oh, yeah, that's why it's there. Because we did have a nasty drop from that area. It's already registered that that's a supply area historically, right? It's already registered. Yep, I got you. It's there. All right, cool. All right, so now watch this. Watch this. What's good, Jay? Watch this. So you got the following scenario. It's already telling you that that was a demand area, right? But then if I even look at this daily chart, this structure is on the verge towards the downtrend, right? I need this 20 SMA, of course, to curve down a little bit more. So I'll have the traditional 5 SMA leads, 10 SMAs in second, and the 20 simple moving average in third place, right? So I need that to happen. So it's not quite there, but that 20 SMA needs to hook over, but it's on the verge, right? But in relation to the weekly chart, why would I look at the weekly chart? Because the weekly chart is next up. The daily chart is almost in downtrend formation, but look how price action is already jumping the gun. Watch this. We're still trying to bring the daily chart down, get the daily chart into its Bollinger Band ride. Watch this. All the while, watch this. The weekly chart is not in a downtrend. Damn, you're right, Reggie. I know. This is a type of buyer's neutral. What? What's a buyer's neutral? You had a downward trend starting to form and the V-shaped recovery. That's a buyer's neutral on the weekly, which you have overextended. How? How did I overextend it if the weekly chart's not in a downtrend? Because smaller time frames were trending. So it's valid of how you got down there. It's just that the smaller time frames were trending to help you because the weekly chart is not in a downtrend. This is a concept that I introduce to everyone as compounding. You haven't even taken care of putting yourself into the strongest daily charts downtrend, right? But your price action is already attacking weekly chart structure that's in a buyer's neutral. Got you. This is a play you're gonna get used to seeing it because we see it all the time. Whenever I start messing with either the weekly charts trend or higher, weekly charts trend or higher, it's what kind of go, even the daily. But I mess with the daily charts trend, is not trending, but we're going through its trend. I can literally see that we're going through its trend because I can see the price action going through the moving averages that show me what the trend is. Not in the downtrend. You're in a buyer's neutral. Buyers are in control here, but you're going through that structure as if it's not even there. Okay, got you. On the weekly, watch this. The weekly chart trending structure is more powerful than the daily, the 4 hour, the 1 hour, the 30, the 15, the 5, or the 1 minute chart. It's stronger than them all. So when this coup d'etat, right, this takeover fails, watch this. We'll be getting a reversal from weekly structure, which is called, in this case, weekly demand. Okay. It'll be weekly demand. Weekly demand can reverse all my smaller time frame structure. All right. So when you know when now this SMA is using moving averages, I'm only going to see this. Watch this. The updates that we make on this weekly chart once a week. Those moving averages will not move like that. So you will think like, man, you're gonna be trading the ghosts of Christmas past because those moving averages are not going to move on that weekly chart at all. You're not going to see the 1 minute chart. They move every 1 minute, the 5 every 5, the 15 every 15, the 30 every 30. It show you how the price is trending. If you use those moving averages on bigger time frames daily, bruh, you're not getting no more moves out of that daily charts SMAs until tomorrow. 4 hour chart every 4 hours, you're gonna have lagging intel. Nope, not gonna have lagging intel. I know you're gonna be like, I'm gonna have lagging intel to make my trading based decisions. Trend is interconnected. What does that mean? That means that smaller time frames are already going to show me how they're getting into structures because of the severity of this situation, right? So with this overextension through the weekly chart trend, I already know. I'll just pinpoint it to you. There are going to be so many examples, you're going to get used to seeing it. Don't even worry about it if it doesn't make sense exactly to you now. You're going to see it so many times. My 4 hour chart is the time frame that tells me the severity of messing with this weekly charts. It's going to give me what's called a V-shaped recovery. When the 4 hour chart gives me that V-shaped recovery, I only need to look for one or two things. I need to see if the 4 hour chart structure is in formation to start recovering, right? I need to see if the 4 hour chart structure is, and I need to see if it already started to happen. Give me a second. All right, so we got the daily charts trend down here. I got it. So we went down to these lows. All right. So right now, this is what I do that I can track it because I know my 4 hour chart with that 5 simple moving average, it gives a V-shaped recovery, right? When I get this 5 estimated gives this V-shaped recovery, let me tell you what's happened. The 1 minute chart already got into a reversal trend. The 5 minute chart has already got into a reversal trend. The 15, the 30, the 1 hour chart have already gotten into reversal trends. They're no longer reinforcing the downward move against the weekly chart structure. By the time I get a simple V-shaped recovery on the 4 hour chart, I got 6 time frames that are now no longer allowing us to sustain downward price action going against weekly chart structure. I literally sat there and watched 5 time frames stop trending against the weekly chart trend. And here comes the sixth one, not even in trending formation just yet, but that V-shaped recovery telling me that it's on its way, right? So the way I can track this is I can see where the low is because I already saw that those candlesticks were touching the weekly chart structure. I'll show you one more time, right? I'll show you one more time. Weekly for oil. Candlesticks already touching the buyer's neutral formation, the V shape on the buyer's neutral. The V shape, that's a buyer's neutral formation. I'm not in an uptrend, but buyers are in control, right? Buyers are in control here. So I already know the following scenario. When my 4 hour chart gives that V shaped recovery, we coming back up. And I need to see if the daily chart still has trending structure. It needs to be broken down a little bit. It does. It got even that 10 simple moving average. Got you. So from where we drew that line, let's see if we see the 4 hour charts. Buyers neutral. Look at this. From where we drew the line, that's why it's important for you to see. Yes, sir. V-shaped recovery. Yes, sir. I got a V-shaped recovery. Watch this. You're going to get some traders coming into when this is oil, when oil opens, they will be coming into the market, waiting to see what this play particularly wants to do. Right? This play, watch this. You've already told me what you want to do. What is that? You want to have continuated upward price action. You already told me. Why? Because you attempted this coup d'etat against the weekly chart structure, and now you have failed. In your failure you lost the trend on the 1 minute, you lost the trend on the 5 minute, you lost the trend on the 15, you lost the trend on the 30, you lost the trend on the 1 hour chart, you're losing the trend, the downtrend, 5, 10, 20 on the 4 hour chart. You didn't lost 6 time frames trends. I'm not gonna sit here and act like you ain't trying to work on number 7. Who? The daily. I'm not even gonna sit here and act like I didn't watch 6 of them go. 6. I didn't sit here and watch 6 time frames be assassinated and messing with the weekly chart trend. Did you hear me? 6. 6 different time frames are no longer in a downtrend. Now here you are surprised number 7 is on the way. No, by the time the 4 hour chart does this, I'm already knowing. Look at this. And I know who's on the menu. What do you mean? I know that this play needs to break this Bollinger Band. Watch this. It's narrow above me. It's telling me that this is a key area of supply right here for oil. 70 around the 79 area. This is a key area of supply. Watch this. When we break this, $79 area here for oil, look who's on the menu right there. Where other traders don't understand why they would be able to hold some positions, not sell early. We already got this thing mapped out. We got it mapped out. Watch this. If you would, that's funny. What's the date on this? Look at this. What's the date? What's today's date? It is August the 8th. You think it's a game. Watch this. It is August the 8th because traders don't be back testing stuff. It is August the 8th and it is 7:54 p.m. Got you. What does that mean? It's Saturday. Okay, it's a Saturday, right? I'm already telling you what this play has in store. Hey, shorts right here, right? Shorts right here. I got the following scenario, right? We're going to squeeze you out of this play. You my fuel. I'm going to squeeze these shorts. When we break this supply area, coming right closer to $79, I want to squeeze you. Why? Because I'm going to form the trends that allow me to sustain upper price action. And guess who's on the hook? You. From when? Last Tuesday. Watch this. You got somebody over here that says, because we opened this way, buyers came in, we formed a fair value gap, news came out. Bruh, I'm already calling it because I understand market structure. It doesn't even matter. Watch this. It doesn't even matter if the peace treaty comes out on Sunday. The play was already geared to go up. This is what people don't understand about market structure. They don't understand. Hey, you think that those people are that make massive amounts of money in the stock, right? You think they plan on the same playing scale as you? I need to pause you. Right? They're not on the same scale as you. They would already be in this play. I told you that the swing trade was all the way back here, buddy. You could have been swinging oil from Thursday. Does it change? Like, does that strategy don't change? Strategy stay the same. Don't matter what you oil, stocks, gold, silver, what you want. What you want? What other commodities do you want? What you want? Forex? What? The strategy stays 100. Display structure is telling me. Did you hear me say bull flag? Nope. Nope. You hear me say trend line? Nope. The price action, the volume. I know the overall structure of this play. I'm seeing you. I'm seeing what you got going, what you brewing here, right? So yeah, you got a swing trade that's coming as you're gonna have a continuation mode. The moment you break this 78.94, you can't be hitting this 78.94 with no extreme upward price action. You're gonna create a avalanche, an upward avalanche of squeezing out shorts from Saturday. That play is going to squeeze the hell out of them and coming back up. And I wouldn't be surprised when I see conditions like this that shit, the peace treaty might be near. I would, the market is already geared to have upper price action. You're gonna say someone say it went up because of news. News will be the icing on the cake. Hey, what is this buttercream? Right? What is this? Right? And you already are geared for it. When we had the last couple of news breakouts, the market was already geared to have a massive recovery. News just helped to put it on steroids. The steroids without the body ain't accomplishing much, right? Yeah, but steroids in the body, oh wow, look at the muscles. This is what trading is, right? This is essentially what trading is, right? So yeah, oil is already boom. Watch traders, I guarantee it. Watch traders come in and start seeing random things, and boy, oil really started to rip. And watch this video. That's what I said. I love being able to document this stuff because traders will come back. Yeah, man, oil did a little something, something coming into the morning, right there, kind of Sunday night, and then it got going, man. It should got into that oil, and bruh, Thursday. All right, got you. This play would only have struggled if, in the event, the daily chart with its structure, watch this, the daily chart with its structure was basically going to be more of a hindrance, where essentially the daily charts trend had a nasty 5 SMA. You still need to break that down first. It would struggle first at the daily chart structure. This daily chart is already pierced through and fell back on the verge to now popping back up. It's already got entangled with daily chart. That's why you actually had the stronger downward move because of your first run in with the daily charts trend. Look at the entire story I can read from these charts, right? So when I see that this nasty move happened and people think it's random, it's not random. That was the daily chart trend that you ran into that pushed the price action back down. You can see how the smaller time frames were getting themselves back into downtrends. Look at the 15-minute chart, 5 SMA, 10, 20, back into a downtrend while you hit that daily chart structure. So it's a play that now needs to recover, right? It needs to recover back. That trend needs to get back into upward price action. It needs to do that first on the 1 minute chart, then the 5, then the 15 to get itself back into. So we know that essentially there's a consolidation on this one until you can basically get back to, because it needs to. Needs to get back into that 4 hour charts. Bollinger Band rod needs to get back into it, and it's geared to do it because this downward price action here, right? This downward price action here, it needs to it still can't actually get into, look at it, it can't get into a downtrend. The downtrend is all the way down here is around 73.96. So this downward price action already tells you that you got entrapped shorts, where if they can't sustain downward price action, you squeeze even the shorts from that Friday back on up. Once that play gets into that Bollinger Band ride, I'm telling you, it's going to squeeze the you know what. You can see, oh, got some August 4th shorts right in here. August 4th shorts right in here. You're going to squeeze them, right? Because it'll be popping back on up. All right. Trend, like I said, I'm gonna do an entire series on trend. I'm not gonna rush the gap because you got to start knowing why your plays give the moves that they do. All right, so for the last one here that I'll do just on this particular live here, just for education purposes, is we're going to walk you through how to trade, right? How to trade. Stop it. What are you doing when you take a trade? What's your opening statement? Watch this. You need no chart to understand the type of trade that you're looking for. You get paid for taking strong moves to the upside. You get paid for taking strong moves to the downside. Boom. What creates them? I got every trader out here wishing they could just break down the market very simply to understand what it is that the hell that they're doing from day to day. Traders out here on a to be determined scenario. Let it breathe. Let's figure it out. Give it 15 minutes. What, 15 minutes or more could save you 50% more on your car insurance? Like, what the hell are we doing? What are we doing? Right? The place, you need to know what the hell your place doing that you're going to be trading. People don't have insight about why the hell they taking a trade. What are they looking for that's happening to give them a trading scenario? We always know what the hell we're looking for. Watch this. We're looking for a big move down that loses its trend. We're looking for a strong move up that loses its trend. Why? So we can take the freaking reversal. So we can take the freaking reversal. How do you lose your trend? Thought you never asked. We already know how we lose our trend. Smaller time frames are trending. They fall into bigger time frames that are not. They fall into bigger time frames that are not. Who? Smaller time frames, like who? 1 minute through the 1 hour. 1 minute through the 1 hour price action falls into bigger time frames that are not trending that way. That's where we get our power. That's where you get your power. Stop playing with it. Stop playing with it. You know where you get your power from. You fall right into higher time frames that are not trending the way that smaller time frames are. Stop playing. Why? Because you now need to disarm. Disarm who? The smaller time frames that brought the trend down there. Watch this. The trend on the 1 minute chart. The trend on the 5 minute chart. They different? Yes, but they make up the overall structure. The trend on the 15, got you. The trend on the 30, stop playing with me. The trend on the 1 hour chart, stop playing with me. We got to disarm them. Why? To get the reversal, or we'll be falling right back into the trend to get pushed back down. Well, who the hell can disarm that many trends? Higher time frames whose trend trumps their power. The trend on a 1 hour chart, who takes that out? The 4 hour, the daily, the weekly, the monthly, the quarterly, the annual. They can all destroy those time frames. Trend. Got you. Thank you. So what are we doing? You're taking reversals every single day of your trading life. Don't you complicate this. Don't you complicate this. Don't you start getting into Asian highs and London lows. Don't you do that to me. Please don't you do that to me. Don't be that guy. Please don't be your artist. What do you mean? The artist that needs to always draws very big bull flags and bear flags and your flag and the Puerto Rican Day Parade flag and the Pizza Hut flag. Look, that's a piece of pizza right there. We cut it in half, right? Whatever you're doing, right? I need you to stop it. I need you to stop being that guy. I need you to stop being that girl, right? I need you to get down to the bare necessity that creates upward and downward price action. I struggle. I struggle for people to be like, yo, I will back test this bare minimum. I'll at least give it a chance. I struggle. I got every trader that I generally most of the time I come into contact with that want to say that, hey, we had a key level. I just drew that, had some candlesticks on the chart. I see that we came into that key level structure and bounced the hell back up. Bruh, you know how many things then took off for that move to happen? The 1 minute chart was downtrend, the 5, 15, 30, 1 hour chart. Oh, you don't want the backstory? Got you. You're going to have mixed results in thinking that a key level of support and resistance is supposed to hold up. You don't even believe it yourself until you start getting confirmations that it's doing what you anticipate for it to do. You don't come into the morning already knowing. You don't come into the morning already knowing. All right, guys, I want to see it come down to this area. Damn, we already saying the if word. The if word is a cuss word around me. If the market is absolutely either going to do something or absolutely not going to do something. It will not be, watch this, it will not be indecisive about what it's going to do coming into a particular key level. Traders will be. not the movement that's going to happen. It either will break down from key structure or it will not. It ain't going to leave it to be determined. And guess what? That decision is made even before it gets there. What are traders doing when they trade? Waiting for the play to get to structure, see what it does there, wait for confirmations, wait for volume to come in there to see that what happened in the past is actually possibly happening in the future, or waiting for confirmation that it's going to do something else to see if they can take it into a target. It's how most people are trading. It's terrible. It's terrible. It makes it too subjective. Oh, well, if this happened, then we could possibly get a move to here. This sounds good to people, but I don't know why. I have no idea why it sounds good to people. It's not a good thing. It causes anxiety. It causes you to be a little bit more concerned that you're watching every little thing that this play does when it comes into a particular area to see what it can determine that it wants to do. Watch this. When you get into a cage with a caged animal that's bigger, stronger, faster than you, do you determine that this animal is going to rip you to shreds? Or are you already equipped for the animal to rip you to shreds before you got into that damn cage with them? It already is a done deal, right? Got you. That's what trading the stock market is. You got people out here thinking that this damn thing is gambling. Oh man, the market can do whatever the hell it wants. No, it won't. The market has way more structure than people. The market has way more structure than people. Is ruled by it. It's an entire formation. Watch this. That counts more money than you will ever have in your entire life. You heard the saying, putting your money where your mouth is? Yeah. Them damn trends that you be seeing? Oh man, I don't even know how much money that would cost. I don't think that they have the actual, I don't think they actually came up with the meaning of how much money it costs to put the entire market into these severe uptrends, these severe downtrends. We're not talking about just upward and random downward price action. We're talking about trends. Oh man. Hey guys, I put the entire market into an uptrend. The entire market? How much that costs? They haven't invented the word yet for how much that costs. Got you. That part. That's what you're trading. That's what we be trading against. Structure. Structure. Not random wild, wild west, right? God forbid. Why the hell would you invent the stock market and it's an uncontrollable, untamed monster? Nope. You know exactly how it's tamed from its own key structure. Stop playing, right? All right, got you. So when you come into a market, you're taking a strong moves down, reversal, a strong move ups, reversal. Let's do a random play and get up out of your way. We'll have some more videos to help you guys out with this. That's why I'm doing these live so you can go and you can go back to these videos and put the pieces together, right? And I'm doing them kind of in an order. The last video we kind of just talked more so about how to put some things on your charts. I still haven't talked in fullness about Bollinger Bands with you guys. I still haven't talked about some things about demand and supply that I want to with you guys. Entering stops. There's a lot I'm going to be going over in these lives, and I'm almost going. I'm gonna be going over that with you in the videos to come. All right. So real quick, Intel gives you a strong move up. I've been saying earlier in this video, this is on Friday, right? Everything I talk to you again is going to want to be about the move that happens generally coming into an open, dealing with stocks, right? Well, this is information you already need foresight to. You're not coming to the open, oh, wow, Intel's starting to go up, man. Let me see if I can get into this place, see if we can take this towards some targets. Stop playing with me. That's not how trading works. That's how I used to think that trading works. It does not work like that. There's already a scenario. This play has already to have a strong move up, had a strong move down. It loses the trends. Why? Because it fell into higher time frames trends that can change the structure of smaller time frames trends to get into trend information. I'm gonna give you guys a quick gem. You'll be able to have this at your disposal to start looking at your plays to see the profile. Bruh, you get paid for strong moves to the upside, strong moves to the downside. I'm gonna need you to understand how do you create them and not be circumstantial. Watch this as the way you see it. Oh man, it really ripped today. I'm gonna need you to cut it out. I'm gonna need you to stop doing that, right? I'm gonna need you to stop doing that. I'm gonna need you to already know what creates it. Watch this, because then you're gonna start having some type of, I don't know, you're gonna have some type of positive mindset that makes you believe that you can catch some of these trades. Nah, bro, you're gonna know how it creates it. You're gonna know how your play creates strong upward trends, strong upward price action. That changes the entire now. Hey, nah, I know how it does that. You see that right there? Yeah, I know how it does that. How does it do that, Reggie? You didn't even look at this chart in fullness. I don't need to. I know how that's created. You had a strong move down. Boom. You lost the trend. Boom. Higher time frames were trending while smaller time frames were downtrending. They lost their downtrending structure. The area where higher time frames were trending and didn't break down, that is called demand. That is called demand. And that demand from the higher time frames trend is so powerful, it literally changes the trends on smaller time frames. This is why we don't come into the mornings and we're looking at the trend on a 15. Reggie, I see this on a 15-minute chart. Look at me. I do not care. Reggie, I see the trend on a 30-minute chart is showing me this. Watch this. I do not care. Reggie, I see the trend on a 1 hour chart does this. Reggie, I think we can get this. Watch this. I do not care. Why? Because those trends on the smaller time frames don't have the domino effect to change multi-time frame uh, trending time frames. The trend on a 4 hour chart, daily, weekly, can change the trends from a 1 minute chart all the way to a 1 hour. What do you mean? Their trend is so powerful. If those smaller time frames can break its trend, which could be in an uptrend or in a downtrend, it creates an entire domino where the first time frame that will correct its structure will be the 1 minute chart. Look at this. Look at this on Intel. You get this strong move back up, right? But look how the trend, this 5 SMA isn't leading just yet, right? When it first recovers, look how it's behind the 10 simple moving average, it's behind the 20, right? So you get a scenario where the 5 SMA on the back end gets into formation. The white line 10 simple gets into second place on the back end. 20 SMA gets into formation on the back end. So what's that trade, Reggie? Was it based on trend? You got to understand how trend works. You got to understand how trend works. This play for Intel opens at demand. Why is that? Why is that so important? We're gonna talk about this last type of trend, and we get up out your way. You have different types of trends. You can have where you're already in uptrends, you're already in downtrends, and you're having continuations of the trend that you're already in because maybe you had a pullback into it, couldn't break it down, and then you have a continuation still of the same trend, right? You got scenarios where you've had such a massive downtrend. When you correct from that massive downtrend, you don't get yourself into uptrend at the same time from the 1 minute chart to the 1 hour chart. The 1 minute chart forms its uptrend or downtrend first, then the 5 minute, then the 15, then the 30. This is dangerous for traders because traders believe that the market has to have a state of confluence in order to move. What do you mean? They believe that the market has to have unified uptrending formation across the board. Like they literally will see that the 1 minute chart's in an uptrend, the 5 minutes in an uptrend, the 15 is in an uptrend, the 30 is in an uptrend, the 1 hour chart is in an uptrend to sustain upper price action. Traders always are getting screwed when they come into a morning that there isn't multi-time frame confluence to show you that your play is already trending. Your play is about to get into trending formation. Watch this on the freaking back end, bit by bit, brick by brick. You got scenarios where this is happening. We call it a trend relay. We call it Debo over here. We call it Debo on this side of town. This is the most devastating structure there is because traders don't know when the burning bridge is getting ready to fall down or going to discontinue itself. They have no idea what that looks like. We know exactly what that looks like on this side of town. Watch this. As you're having a strong downtrend move, let's see who's our structural anchor here, right? We'll see our structure. This is why the bigger time frames are so important in trading. This is exactly why. The moment you're giving such a massive downtrend move, look at this 9 o'clock candle. The moment that you're giving this, because you hit a supply, I can see it. You hit a supply area here, right? You have this nasty downtrend here on INTC. Watch this. INTC the whole time, Intel, the whole time it's giving me this downward move. We got problems, red flags, because we understand market structure. Guys, let other traders play catch up. Let other traders play catch up. Don't you play it. Let them play catch up. This may register to them how to trade this way years down the line. They're not there yet, right? Let them continue to play the games that they play. Oh, I want to see what price action does coming into the open. Nah, price action is, watch this, an effect. Patterns, an effect. Volume, an effect. You have events that create price action. Events that create patterns. Events that create fair value gaps. Events that create candlestick patterns, bullish engulfing, bearish engulfing. They are not causing events. There's one particular trader that will